Hi everyone, welcome to Diamond Chai. I'm your investment guide, here to deliver simple, transparent strategies for beginner investors. In our last two episodes, we explored Warren Buffett's portfolio and found that adding 10% bonds can slightly reduce volatility. But for true set-and-forget investing, it's not quite enough. Today, we are diving into the classic 60% stock, 40% bond portfolio to see if it can lead us confidently to the peak of financial freedom. So, what is the 60% stock, 40% bond portfolio? It's simple. 60% stocks for growth and 40% bonds for stability and income. This timely strategy balances risk and reward, perfect for investors who want to sleep soundly. Its foundation comes from Harry Markowitz, the father of modern portfolio theory. In 1952, he published Portfolio Selection, laying the groundwork for modern portfolio theory, or MPT. In 1990, he won the Nobel Prize in Economics. Then, Vanguard's founder, John Bogle, brought this strategy to households everywhere. In Common Sense Investing, he said, "Simplicity is the key to success." Bogle earned the title Father of Index Investing. Is this a gift for lazy investors? You could buy the Vanguard Stock Fund. Take VGSTX, was just a $1,000 minimum, already made a 60% stock, 40% bond portfolio. But hold on, Diamond Chai has a dirty secret weapon to slash volatility even further. Stick around for the surprise. At Diamond Chai, our ETF picks are guided by simplicity, large scale, high liquidity, and low fees. We are building our 60% stock, 40% bond portfolio with two Vanguard ETFs. First, VTI tracks the entire US stock market, covering large, mid, and small cap companies. For ultimate diversification, BND investors in US investment-grade bonds, blending government and corporate bonds for rock-solid stability. Both ETFs are massive in scale with expense ratio of just 0.03%, among the lowest in the market. Those savings could buy you a few extra dinners. Why choose ETFs? They are easy to trade, cost-effective, and fully adjustable. Beginners don't need to watch the market, just set it and watch money grow. The theory sounds great, but how does it perform in reality? At Diamond Chai, we don't trust hype, we trust the data. So, we backtested 30 years of performance from 1995 to April 2025, through the 2000 dot-com crash, 2008 financial crisis, 2020 COVID pandemic, and even the 2025 Trump tariff shocks. Invest $1 and 30 years later, the 60% stock, 40% bond portfolio grows to $11.61. It's a 10.61x return. That's an annualized return of 8.44%, slightly below the S&P 500's 10.6%, but the maximum drawdown drops from 55.14% to 33.94%, and the longest drawdown period shrinks from 91 months to 36 months. What does this mean? You will sleep better and stress less. While returns are slightly lower, the risk is dramatically reduced. A 10x return in 30 years, is that enough to set and forget? The 60% stock, 40% bond portfolio is already solid, but at the Diamond Chart, we are chasing ultimate peace of mind. Last episode, we added managed futures, or CTA, to Buffett's portfolio to cut volatility. This time, we are adding 20% CTA to the 60% stock, 40% bond mix. What is CTA? It's a trend-following strategy, shorting in bull markets, going long in bear markets, like a surfer riding market waves. We rebalanced the portfolio to 50% VTI, 30% BND, and 20% CTA, and we have got detailed charts to back it up. Check out these incredible results. The dirty 60% stock, 40% bond delivers an 11.84x return over 30 years with an annualized return of 8.8%, 0.36% higher than the original. The maximum drawdown drops to just 20.33%. 2000.com crash handled. 2008 financial crisis, no problem. This optimization keeps volatility so low even beginners can smile in their sleep. Why is it so effective? CTA has a low correlation with stocks and bonds. When markets fall, it might rise, creating a perfect hedge. So, the 60% stock, 40% bond portfolio is simple and reliable, delivering a 10x return over 30 years with manageable volatility. The dirty version, with 20% CTA, achieves an 8.8% annualized return and a maximum drawdown of just 20.33%. A true set and forget gem. But can we push it even further? Absolutely. Next episode, we'll explore Harry Brown's permanent portfolio, adding commodities and cash for one of Diamond Chart's ultimate recommendations. It is built to fight inflation and survive market crashes. You don't want to miss it. Diamond Chart keeps it transparent. VTI, BND, and DBMF. Build your portfolio yourself, and financial freedom is within reach. If you enjoyed this, please hit the like button, share, and subscribe. Your support keeps us going.